what they're saying, right? To be clear for our audience, because I actually read that article. I didn't look at that. But let's what they said was
dropping gems like we preaching.
Welcome back to the Jury's Out podcast, a show you come to watch attorneys and their friends talk about relevant issues of the day. Today we're talking about cryptocurrency. I'm with my Aloysius. I'm saying it wrong, but you know what I mean.
Hey, yo!
See, that's Aloysius. That's what you get for trying to use big words.
Illustrious. That's what it is.
Illustrious.
Illustrious. That's what you get for having a speech impediment. Trying to be fancy.
The illustrious M. What's good, y'all? What's good?
Jack.
And just Jack. Yeah, I'm here. What up? Spartacus in the building.
And we're here with our guests today, Peter Shue and Brad Vance. Introduce yourself to the jury, guys.
My name is Peter Shue. I'm from Bronx, New York. I've been in the crypto space since 2015. I'm here to talk with my boy Brad right here. You know what I'm saying? Let's go. Let's talk crypto.
And Brad?
What's up? My name's Bradley. I've been it's my second time coming back in the crypto space after last bull run, but definitely here to stay now. Definitely here to talk about some crypto today.
All right. So we're here today to talk about crypto. If you don't know what that means.
I don't know shit about shit.
No?
And that's why we're here.
Yeah, so I'm really looking forward to this, so let's do it.
So let's start it off with, what is cryptocurrency?
Oh,
Who wants to answer that question first?
It's a peer-to-peer cash payment.
Okay.
Digital.
Okay.
Let's keep it simple. It's
Okay.
peer-to-peer. It's lightning speed.
Okay. And why is that important? What's
That's important now because a lot of things are not cash anymore. A lot of things are digital. So we need to have some transparency of where our money is going. So people get things misconstrued with blockchain and crypto. It's two different things.
Okay.
Blockchains for the transparency and cryptos for the peer-to-peer.
Okay. So a blockchain, to my understanding, is kind of like the highway in which the car travels on. If cryptocurrency is the car that's traveling from one place to another, blockchain is the reliable highway.
It's a ledger.
It keeps track.
It's digital ledger technology.
Okay.
Right.
That is the formal sort of like technical.
So can you break it down for someone who
AKA,
doesn't know what digital or ledger is?
AKA the honest ledger, by the way.
Okay.
Yeah,
And
transparent.
what makes it honest? Like,
Transparent.
It can be audited by any user, right?
Exactly.
Like anyone can sort of go on the sort of blockchain explorer and see all the transactions all the way back, to the beginning.
Let's do something even simpler than that. There was something, I think in 2015 or 2014, I think Red Cross did 500 million in donations and made 6 huts.
right. In
So
Haiti or something like that,
so
right?
how much huts cost?
I don't know.
500 million?
Not 500 million.
So the transparency is like, okay, where did my donations go?
Right.
So we don't even know where that went. It would have been great if even BLM made their own coin. That would have been great, but they didn't. They could have excelled on that.
Right.
To show, everybody transparency of where their donations were going. So until the first person do that, like a big organization, that would be great.
All right, so let's take a step back. How does that? Why is it transparent? How is it transparent? If I didn't, let's say I'm a grandma in fucking Kentucky and I don't know how to use the internet, how transparent is it to me? You know what I mean? So, explain what makes it transparent and why it's transparent for someone who doesn't understand.
Every wallet has a destination, basically. Every wallet has an address.
Okay.
So a donation wallet will have their own address, their own, receivable address. So when you send a fund to that receivable address, it's on the blockchain, and you can look at the blockchain on Etherscan.
Yeah.
So you can do that, and you can, I expect the younger people to explain to the older people, that's how we get through life in general.
Yeah.
So I expect them to explain it in depth, but that's just the simple way from one place to another.
that wouldn't necessarily be the benefit for like a grandmother using the technology in the first place, right? Like if your grandmother is not using Venmo and not using Cash App and not using these apps already, this is completely out of the realm of what she's going to be using. But if you are, if when we get to the sort of, because right now it's very, there's kind of this rough friction, right, with these sort of DeFi protocols, and half of these coins are just like, experimental. Like we are in the beginning stages of builders and developers trying to build new products. Some of them are skeuomorphic, so some of them are going to replicate products that we already have in the financial system today, but they're not accessible to the average person, right? Like the average person cannot go and open a savings account with a yield above 0.001%. It's just like, it's embarrassing, and you can't, there's no value in that for the consumer. So these new products, mainly for, they will have better interfaces where you have an app just like Venmo where you can deposit money, send it easily, and have like a record of, you could type in someone's wallet and you go and you can see it. So that's the transparency element.
Right. So that's my question. Like, how is it much different from Venmo, Cash App? Because clearly there's a chain, right? You see that I gave you $14 on Venmo, and I can always pull that up.
Right.
So then how is crypto different from that, except it's not using
it's
cash?
a public ledger.
Right.
I can't look at your Cash App.
It's immutable as well.
Okay.
Yeah.
Got you.
Immutable meaning what?
Like you can't change it, right?
Yeah.
Like it's Venmo's ledger. They can censor, they can get rid of whatever transactions they wanted to. They can also get rid of your account tomorrow if they wanted to.
So this is an important element of the blockchain that I only recently understood. And tell me if I'm explaining this correctly. The integrity, security of the blockchain is maintained by the fact that what is the block family, what makes it exist, is an understanding between a public.
Social consensus. Social consensus.
So explain that.
So basically social consensus is, we have social consensuses as human beings that you leave the house with clothes in the morning, right? Like you're supposed to be.
Not if I want to be slanging his dick.
Right. Obviously, people fall in different camps. Some people are exhibitionists. So.
It's warm outside.
I'm gonna make sure my shades are down when he comes outside. I don't know what's going on.
But yeah, it's just like we have these sort of rules that we kind of join upon. Like these are acceptable. These are how we want to govern ourselves. This is how we want to govern our society. So the same thing happens in with the blockchain, with the community, people behind it, just speaking up, talking about how what they want in the product, how their experiences in the product, and understanding, that the user matters, right? Whereas.
Exactly.
Like the Tron, right?
It's like, what? Oh, okay.
There's even voting.
Right.
There's even voting, governance tokens and stuff like that. There's vote. You'll be surprised.
I mean, there's a pretty current example of the governance being used right now. One of the founders, the project is still a good project, right? The ENS, Ethereum name service, like the same way we have domains and the same way we have like websites we go to, people can have their own .eth address, and that is your new wallet instead of a long ass code full of digits that you're never going to know or remember. Everyone's going to have their own whatever. It's like, someone .eth, a company .eth, Budweiser has their own. A lot of brands are starting to get into it as well. But one of the lead developers of it, who is, a Catholic, then he has some thoughts that are, quite antithetical of what a lot of people want to be associated with. So like, a bunch of his tweets came up.
Bullshit? Is that what you're trying to say?
I mean, he was just talking about, just Catholic things that he believed that surfaced from 2016 that people were very uncomfortable with seeing surfaced. And then when they surfaced.
The miracle of the Trinity? Like, what we talking about?
Like telling people what to sin, homosexuality, transsexual, it was like a cleansing sort of like Twitter moment, right? And then, people are now like, want to cancel him. But there's a governance process, so they can vote him out of his position, which you can't do if you don't like the CEO of Walmart.
Or the CEO of Chase.
Right. So let's,
And that's
we got really close to understanding what crypto is. But let's get past that. How did you guys both get into crypto?
oh man.
I'm gonna go first.
Yeah, go
All right.
first.
Well, I got into crypto because my boys were into it. They were, trying to find riches in, Stellar, and XRP and all those, and they didn't really like teach me what it was, right? Like they were into it and stuff, but I didn't really know what exactly it was. Then I left the space for a couple of years, came back, and now the past year and some change since the fall of 2020, I've been full-time researching in crypto, just like trying to understand what this stuff is, how it works, what the investment opportunity is, what the, just everything about it. So that's, kind of got myself.
What are the top 5 things you've learned in that process?
Oh my goodness. I've learned a ton about, it's, if you're an academic, if you're someone that loves, learning, if you're someone that loves, just like knowledge and reading, crypto is one of the most fascinating things you could, even see. It's just like, it's the most interdisciplinary thing I've ever even seen. It's just like every economics, it's finance, it's politics, it's everything. You're learning all of these different aspects about life that are now packaged in this new cool technology where it's easy to get distracted by how quickly people are getting rich, how quickly, everything is changing. You've got companies starting to, come into the space, and it's just, what's the highest thing? Let me bring it back here. I mean, 5 things. Okay, so I learned more about the banking system, how money works, right? I learned that when you have money in your bank account, your ATM, it's not actually there. The bank loans it out.
It's IOU.
Exactly. It's
Yeah.
Everything is like an IOU. So you learn about how the financial system works. Then you learn about how actual governance systems work in real life. Then you learn about incentive alignments and how that applies.
What's an incentive alignment?
So currently with companies, their incentive is to boost their bottom line, right? Their shareholders are the ultimate people who corporations answer to, right? Because someone's money is in your company and you're trying to make them a return on it. So what they want to happen matters. And if they don't want you to raise your wages to $15 an hour because XYZ, because that's going to affect your profits, going to affect your revenue, companies are going to hand tie it because that's bad PR or this and that. And like, there's just a misalignment in incentives with the consumer and with the owner of the business. And if you can align those incentives, you get a user experience where they are rewarded for their participation, their, patronage. Like imagine going to grocery stores or stores, and instead of getting cash back, you get stock back. You get equity in the company back. You spend $5,000 to, Christmas presents shopping, you get some form of that back to, more Christmas presents or for something else that you could use. So you are not just a constant consumer getting extracted from every opportunity that the company has.
So, but for this to effectively work, that would mean that companies would have to adopt a coin or another that can be tracked as their method of salary payment?
No.
Okay.
That is not.
Well, what's happening right now is coins are being created on the private sector within themselves, which they don't have to pay you in anything else other than their coin. JP Morgan's has their own coin. PayPal's working on their own coin. Facebook, failed. but they did a smart move. They changed their name to Meta.
Major pivot.
Yeah, that was the best thing they could have done because everything they own is going down probably.
It looks really silly right now, but
Yeah.
it won't. And it's unfortunate, but it will be a pretty smart decision in 5-10 years.
Yeah, it was.
And further.
And what is that based on?
Oh, Meta is just, augmented reality, virtual reality, the metaverse and stuff like that.
No, I mean, I'm sorry, not to cut you off. I mean, like, what are they doing successfully from your perspective? Like, I know what Meta is. I mean, like, what are they doing that's setting them up for the future?
Well, they're getting into a market that a lot of people can't really touch right now. They don't even have the brain power or the capital power to even touch these type of projects that Facebook or Meta is getting into. I have to get used to that. That Meta is getting into. So it's all these different companies. I expect Apple to make a move soon. All these different big companies, PayPal, Cash App, all these big companies, it's not Joe Schmo down the block. You don't hear them changing their business format at all. So they're preparing for the future while they're getting hit with the loss. That's just the same thing that happened in the .com bubble. Same thing.
So what exactly happened to Facebook that made them want to take this route, though?
All that awful PR. the fact that
just the PR of it.
I mean, it's the, like they, it's a really bad look. They built a really strong business on what we call network effects. And this is like basically a new business model. And Facebook is the first successful iteration. No, I guess, yeah, besides Amazon, I wouldn't really say Amazon's that much of a network, but it's the first. You can argue that, but that's not the point. Basically, network effects are, every single user adds more users to the ecosystem, right? So the growth that can happen via network effects is different than the growth that happens in traditional businesses, where you need bodies to walk in and you sort of a more
maintenance.
It's like a more organic growth. It's a more organic, slower growth of businesses, and that's what we've been used to for decades. Now we are in a new age of the information age, from the exponential age, where things grow much faster, quicker, the adoption's faster. You look at the rate of adoption for the internet since like 98, and it's, it was the fastest growing technology then. And now we've got crypto, which has the internet rails behind it. So it's got, it's like turbocharged to adoption. Yep. So it's being adopted twice as fast as the internet is.
To the moon.
Twice as fast.
Yeah, so the crypto adoption is twice as fast as the internet adoption was. And with the same point of users, 100 million users, and when the internet had 100 million users.
And so you said a little word before when you said DeFi, right? Now, can you explain what DeFi is short for and what it means?
So DeFi is short for decentralized finance, and it is essentially giving everyday people access to financial services, which are basically exclusive to high net worth individuals. So, just all these banking services that the average person is not going to get. Like, you don't go to the bank and you don't get that much percent. But if you have, half a $1 billion, you have a couple $1 billion, it's a different story, right? What's that? I know that saying, like, if you owe the bank like 10 grand, it's your problem. But if you owe if the bank owes you $100 million, then it's their problem. Yeah. So like they care about people who have more money because that is where they make their money off of, and transaction fees, overdraft fees.
As soon as you put your money in the bank, they're calling their big boy loan guys.
Right.
As soon as you guys do that.
Right. I understand that. Like I remember getting into crypto and watching the YouTube video, and this guy was like, "Listen, man, if you got $100,000 in the bank next year and you don't touch it, next year you got $98,000."
Well, yeah. Well, to touch on that, the purchasing power of $1 million right now is 30 million. So if you don't have $30 million, you don't have $1 million from if we're talking about 1913 or something like that, 1940.
Explain that math again, how's it work?
Okay, so the purchasing power is being depleted. So to have 30 million
of American dollars,
if you have 30 million, you have equivalent to 1 million purchasing power from back in the day, in the 1900s.
Oh, okay.
In the 1900s. That's a problem. If you look at milk is not the same. If you look at cheese is not the same. The price is not the same. So you're losing value ever since 1913, your dollar. Your dollar can buy what today? Not even the McDonald's burger.
I mean, milk is more for the gallon than oil is. Right? How much is a gallon of milk?
Yikes.
$5 something? $6.
$6.
Yo,
That's
milk
crazy.
is more expensive than gas, bro. That's crazy.
I just bought that shit. I just bought some milk.
Yeah.
I drink oat milk. That's the bad thing.
And like you gotta understand, these wealth managers, they don't let people in the group unless you have 25 million. And it's a reason why, because that's the equivalent to having 1,500,000. See, we chase the 500,000 to 250, even the 10 G's, we're like, oh yeah. But in reality, adjust inflation, it's not even worth anything at this moment. Don't we spend $100 like it's a $20?
In New York City, you got to step outside. You spending $100.
Exactly. It's scary because one day $10,000 is going to feel like $100.
I used to have a whole hustle after work. I had a bar to go to at 6, and I had a bar to go to at 8, and I had a bar to go to at 9, and everybody beers the whole way through. By the time 10 o'clock, I'm like, I can buy a shot or two.
So decentralized finance is a potential answer to that, right?
Yes, DeFi is basically it's a solution to bringing these services to more everyday people and not being protected by centralized entities like banks, which don't particularly have the interest of working or middle class people at heart. So just understanding that, okay, this is like how this stuff works. Okay, well, now we can have access to this stuff. And so, you know, the decentralized element is that these protocols are open source. You know, anyone can sort of, any coder, any developer can sort of join in and add stuff to it. They can look at the code, they can audit the code, and they can build, they can use it. It's like the composability of crypto, because it's open source, means that the innovation can happen 10 times faster, probably even more, because you can build off of what, once you make a mistake, that mistake is now fixed forever, right? Like, so mistakes are made once, you fix them, and then you keep building, you keep building, you keep building, you keep building. It's really remarkable. I'm not a coder, but it's like ridiculous to be to be in an ecosystem in crypto, like the community, where it's like so many developers and so many, you know, shape rotators and people that just engineers that think differently. They're not like, you know, they socialize differently, and they're just like, you know, it's like the genius in someone. It's just like,
there's, for people such as myself who find it very confusing, there's two main types of crypto. There's like Bitcoin and there's Ethereum.
right. Those are the two biggest ones.
Those are the two biggest ones.
Yeah.
And they're different.
Right.
Yeah.
How are they different?
Well, one is proof of work and one is proof of stake.
Okay, so what is that?
They're both technically proof of work right now, but not for long. That switches in less than 4 months.
So Ethereum 2 is coming out.
So they're both proof of work right now.
What the fuck are you doing?
Yo, and listen.
Jack, help us help you.
Nah, we just met today.
Yeah.
We just crypto buddies.
Yeah.
We in the crypto community.
Years, bro.
So we just feeding off each other.
So you said proof of work and proof of stake. So explain what does proof of work mean?
Okay, so these are consensus mechanisms for how transactions are validated and verified.
This is very important.
Right. So proof of work is, years ago when Bitcoin first came out, you could mine it on your computer, right? It was easy for everyone to mine. And then as the mining market grew, more competitive, it started to be less people, more like people that have to invest a lot of money for hardware. And then it became companies. And now it's, big corporations with these massive farms full of hardware, just 24/7 mining Bitcoin, because you need to solve complex math problems to be rewarded in Bitcoin to help verify and secure the chain. So that is very energy intensive, which is an easy pain point for people who are not pro crypto, because they're like, they just put everything under the same umbrella. Like, it's all, and it's so energy consumptive. And it's like, well, maybe you should forgive Christmas. Maybe you should stop with the Christmas lights. Maybe you should stop with the cell phone. Right. Maybe you should stop with everything else that you do.
Shut your AC off in the summertime.
Oh my goodness.
Let's look at gold, how it's mined.
Ridiculous.
Little kids getting their fingers cut off. Okay, so now it's proof. That's proof of work.
Right.
Proof of stake. Can you explain what proof of stake is?
It is basically validated from people putting their crypto up and verifying transactions. You can run a node, and for software, people running a node is like the fact that how the ease at which you can run a node is the measurement to how decentralized your network is. The easier it is to run a node, the more decentralized your network can be, the more secure. A node is it's just software on the computer that helps validate transactions.
Yeah.
Right. So you help verify transactions. You are a member of the community helping secure the network, and that's an important task to do.
Now, is this a responsibility that is like making sure that you're getting good money, good crypto? Is that a responsibility of the receiver, or do we pass those responsibilities along to like Robinhood or crypto or crypto.com?
What do you mean?
I think he's talking about the validators.
Yeah, the validators. Like, are we like? Is someone who purchases crypto expected to validate his own money or get fucked, or is that part of the process?
No. This is everyone's encouraged to do it, because the more people that do it, the better it is for the network, the health of the network.
Okay.
However, the reality is most people will not run nodes. People will be able to run nodes because Ethereum has a very clear roadmap of what they want to do over this year, next year, and the next few years. And there is a goal to gate to a certain state of Ethereum where the hardware component is no longer as intensive and people can run full nodes on their phone. So they are trying to go in that direction, which would help further decentralize and secure the network. The more people running nodes, the more secure the network is, the less likely you are to be hacked, the less likely you are for anything to happen to you. So this is why you want the security of the network. This is why you encourage this.
Right. So now you said a big thing that I see a lot of, it scares a lot of people, right? It's like you've got my money on the internet. There's hackers out there, right? And so the hackers could come and just steal my money. So explain what does decentralized finance and cryptocurrency and blockchain, how does it combat that, or how does it make that less possible? Because I know that you could hack Chase and you get all their personal information of all of their clients because you just got to hack one computer,
Right.
That they or one
Centralized server.
One server, and you got all their shit.
Right.
Yeah.
Right. How is that different for this?
It's a little complex to just. I don't think Bitcoin ever got hacked, the blockchain. So it's a little complex the way it's the mathematical sequence. Now quantum computing is coming out, and that can hack Bitcoin's blockchain unless we upgrade.
Let's take a step back.
Okay.
'Cause I feel like
I'm sorry. I said something back there.
No. What you're saying is not better. I'm speaking for the audience.
And me.
And my boy Ev.
Which is good.
You run a node. When does a node get run?
Okay.
And what happens if your node comes bad? Like, do you get your money back? Like.
You get slashed.
Yeah.
So if you are running, so you can be a staker, right, and help validate the network. You need 32 ether to be a validator, right? So
That's
need
roughly like 200,000 right now, or 100.
Yeah, something.
Yeah. 300.
It's something,
Yeah,
These
right?
are the people who run the node.
Right. So in order to stake, you need to have 32 ether, but you don't need to stake to run a node.
Okay.
Right. So you can help validate transactions, but you can also help run a node. They're two separate things. So it's expensive to validate because you need to put up whatever. So that's why only people who have that capital or have that desire to will do that. And that's the barrier of entry to help, prevent bad actors from acquiring the capital to do anything nefarious. Right.
But I guess fundamentally my question is, if I'm someone who's trying to get some Ethereum, is this node being run in the background? And what if a node comes out to say that I got bad Ethereum? Am I just fucked?
No, that's not how it works. The same reason how you work on a computer. It's like the same nodes are how the internet works right now.
Okay.
It's just wireless networks, right? It's wireless points of data that, ping signals and get signals back.
And that's why Ethereum has their gas fees how they are, because the network does get congested, and if you don't pay a certain amount of gas fees, you get dropped out of that, validating point.
So wait, gas fees, that's like when you use too much memory, or like when you use too much?
Gas fees is used for, the congestion of the network. If you use, fast, medium, slow, whatever you trying to get into that next block to get validated.
Yeah, what I was thinking was like if you use too much data,
It's a transaction
they
fee.
slow you down.
Gas fees are transaction fees.
Yeah.
So if you want to transact on the blockchain, you will have to pay a gas fee.
Yeah.
And right now, gas fees are pretty prohibitive for everyday people because the blockchain has grown in size a lot. So 2 years
you want it to
ago,
grow, so-
2 years ago it was cheap and everyone could, because it wasn't as popular. It was still
Day trade.
Exactly.
well, not even just day trading, using the blockchain at all, right? For NFTs, for anything to transact in the blockchain, you will have to pay a gas fee. And as the blockchain has grown in popularity, in periods of congestion, the fees are pretty high, right? So if you want to do a simple trade for $100 and your gas fees are $200, $300, $400, or $500, that does not make sense for you to conduct that transaction.
So that's why other, things are popping up like Solana, Avalanche, Polkadot.
And these are other
because-
layer ones.
Exactly.
Sorry.
Other layer ones.
What does that mean?
Layer ones, it's not layer two. It was a crypto joke. It was a crypto. It's not scalable, right?
We got you.
It's just not layer 2.
Listen. I had to cut that crypto joke real quick. We just met today. It's just a community. It's just community.
I'm loving this shit though. This
Yeah.
is dope, man. This is
So
No, it's really dope.
without getting too technical, right? So
Try your best.
layer ones, right? Layer ones are bootstrapped by layer 0, which are the people. So layer ones are where, the transactions take place. And there's a trilemma with blockchains. You choose 2 of the 3 things to be really good at, or you have to develop a cohesive roadmap to hit all 3. You can be really secure, really fast, or really decentralized, right? So you have to pick. There's trade-offs, and engineers understand that there are trade-offs in things that you do. So you can aim for the best, but you have to understand where you'll fall short. So Ethereum tried really hard to be decentralized and secure, but it's not very fast. But it is scalable. right? So it is scalable through something that we call modular blockchains, which is sort of like the new age of blockchains. Thus far, they have been, you can do things on one layer, Solana, Avalanche, some of these other layer ones, right? And so you can do similar things on these blockchains as well. So they, you do similar DeFi things, do similar NFT things, but the blockchain is much cheaper, right? And so a lot of everyday people, which is obviously not super everyday people, it's more software enthusiasts who don't have a lot of money, will prefer to go to the cheaper ones because they can conduct similar DeFi transactions and NFTs using this, right? But they are sacrificing being decentralized.
Listen, I think we're gonna have to come back a couple times. I can just read you.
It's okay.
Listen,
This
is why both of us is not talking.
Okay, so
It's a lot of information. You know?
how much?
We didn't even start NFT real estate yet.
No,
We're not doing that. We're not doing NFT real estate. Can I just say the first home that was.
No, we're not talking about that. We're not talking about that. Listen, that's why I wanted to talk about what this shit is.
Okay, let's
right?
keep it simple.
And
Yeah.
What it is.
Understand.
How it's a tool.
Yeah.
Right. Simply put, it's a tool. It's a tool.
We still trying to look at it.
Listen,
Yeah.
it's a
I'm gonna
tool.
hold
It's a
it.
tool
Does it have a handle?
that was.
Yeah.
It's a tool that was birthed out the financial crash of 08.
Right.
That's here to help us with the
Right.
new problem.
Now-
inflation hedge.
Now that we've kind of explained that it is a tool and shown how it can be a tool, now I really want to tap in on how do we know what are simple things that you can do to pick the right tool, right? So not say, oh, I know this is gonna make me mad bread, but how can you pick a cryptocurrency or or a blockchain project? What are some of the things that you can do to be like, okay, this has the potential to be reliable. These people are doing good work, right? I know one of the things is you read the white paper, right? I've always heard read the white paper.
Yeah,
So I would like
white
for you to
paper.
explain, what does it mean when someone says read the white paper?
Well, read the white paper to understand the tokenomics of how the coin works.
So what the coin or the company that
It's like-
is backing the coin,
Yeah.
what they plan to do with the technology that they're building.
Because if you go to school, right, if you go to college, like let's do an analogy that everybody knows. You go to college and you have a test coming up, right? You're going to study for that test and you're going to potentially know a good percentage of what's going to be on that test, right? That's the same as the white paper. The white paper, you study it, you read it, and you understand, or you try to understand, you Google certain words you don't understand of what the hell this project even does.
Okay.
And that's that's where you go.
And what are like the top 5 things you look for on the white papers to see that this is a good investment or not? That it's gonna, because I know crypto is very much known for like huge, like it's gone up 1,000%, right? And if you put $1,000 and something goes up 1,000%, that's times 10, I think, right?
Yeah.
Yep, times 10.
That's $1 billion.
Well, not,
$1 billion.
not before Brad hit you with his, crazy summary. That's gonna make your head spin. But to keep it
Keep it simple.
keep it simple,
Like, where does someone start? Yeah.
when someone starts, it just looks at popularity.
Okay.
You look at popularity, you look at what the biggest one is, and it's too big to fail. Go in with that mentality, like Bitcoin's too big to fail, Ethereum's too big to fail. So go in with that mentality.
Is
Like,
Doja too big to fail?
Nope.
listen, okay, all right, listen. A lot of people don't like the meme coins. A lot of people, but we gotta make it
Help me,
fun.
please.
The meme coins make it fun, don't it? But listen, some of us won in the meme game.
You can always tell who won in the meme game and who's enthusiastic about them and who is like,
I'm definitely in the meme game.
There you go. But this is
Get back to white papers.
Hey, does memes mean actual memes?
Like there's coins based off of memes.
yeah.
Oh, okay. Thank you.
Yeah.
one could argue Bitcoin is too.
Bitcoin's a meme?
Yeah,
You know the Doge?
Yeah. I know
They
what
made a
Doge.
coin off of that.
Ah, okay.
Just
gotcha.
like they had made a Squid Game coin when
Yeah.
Squid Game popped off.
Oh yeah.
And everybody put into that.
Which
and
went
then
up 250,000%.
It went up 250,000%.
Yeah.
And
I
then
didn't jump in that one.
The developers pulled the rug, sold all their
Yeah.
coin at that, and in a matter of 15 minutes.
Yeah, they're in Switzerland right now. They're
It
going.
went all the way.
They're
It
going.
shot all the way
Because-
down, and anybody who put their money in before lost it.
Yeah.
Yeah, that's like, I guess that's what we're all worried about.
Yeah.
And it's
But
like,
that's what happened to the node, right? Is that
Well, that's what I was saying. It's too big to fail. Bitcoin's too big. See, you went for get rich scheme, as they say, right? So once you go for that, you don't listen to me no more. You're done listening to Brad. You know what I'm saying? You're on your own.
Yeah, you gotta know what you're getting yourself into. You gotta know what you're getting yourself into.
But you gotta understand before you start, Jack. You gotta understand this is a global asset for the first time in history that we can all invest in 24 hours, 365 days in a year. It doesn't close. So the structure and the money of it is so little to where it can go. You know, there's trillions of dollars missing from this market.
So have diamond hands.
Yes. Buy good assets.
Disclaimer on the diamond hands. Disclaimer.
Diamond hand, that's always I feel like it's always a gamble.
As long as they're too big to fail.
Right.
Yeah, you gotta have some big hands, man.
So to go back, you guys were saying, I think you guys are trying to give us there's a phrase where it's like the good math or the good like logic of picking these coins.
Yeah.
But there's this other aspect to it that's almost on like not following your lessons, but it's on the same track, where it's like it's a great opportunity to flip and make money. How is it either or? Can you do both? Why do some people? You know what I mean?
Right.
No, I was just nodding.
Oh, I was gonna say a few words. I know he's loading up, so. But I would say, do a little at a time. Listen, like the money thing, I understand. And everybody's trying to get rich. We all trying to get rich and get to that nice Rick Ross type of house. Right. But it's good to take your time to it, allocate and learn along the way. You know what I'm saying? So allocating is really good. Diversifying your little portfolio, whatever you have, and just go from there. Sometimes it doesn't have to be a big $5,000, $10,000. When you go play the lotto, how much you spend?
$1, $2.
Exactly.
Right? Yeah.
You can do that a week, and you can do that every 2 weeks with crypto. You don't have to put your whole check, but people are doing that. Yeah. So.
Which is high risk, high reward when it comes to that type of shit.
Exactly.
So we got to the white paper, right? Do your research, figure out what it is the coin does, right? You're saying also too big to fail.
Yeah.
What about like I noticed like on some apps they'll show you like the market cap and it'll show how much is being bought, how much is being sold.
Yeah.
The volume, right? So like what are some indications along that you kind of want to look for and looking for? Because it's kind of similar to like stocks, I would imagine, right? You want to look like how many stocks are out there, how many people are buying them, how many people are selling them, right? And so it's for y'all, is there like a percentage? Like, if it's over this percent, then this is a good buy right now. If it's under this, then I'm not gonna fuck with it. Or if I own it and it goes under this, I gotta let it go. So
that was 1,000 questions, man.
Okay, my fault.
I know what you said.
So what percentage it looks like are good percentages to get in?
Well,
when you're looking at a coin.
Well, I'm just address one thing. That sounded a little like day trading a little bit.
Yeah.
But no, just getting in.
I want
This is not financial advice.
Disclaimer.
Yeah.
But you want to look at right now. It's a little sketchy if you're day trading because we don't have a spot ETF right now. We only have futures.
What's a spot ETF?
A spot ETF is an ETF that is secured by an underlying asset.
What does ETF stand for?
Exchange.
Yeah, like exchange traded funds.
Okay.
Right. So
exchange traded
this
funds.
is a new financial product that's like, I think 10, 15-ish years old.
I love this part when Brad starts kicking it. Go ahead.
It's just it's a bunch of stocks into an ETF, and ETFs are based on different themes or different sort of characteristics. Thematic investing. There's ESG investors. All these different ETFs that are baskets full of different companies' stocks. Right. Yeah. So there are some similarities to that. I would not say that we need a spot ETF, but the spot ETF means that the ETF is secured by buying the underlying asset.
Exactly.
Like market price, and whatever price it is. Not a derivative, not a futures contract.
Exactly.
Not something based on the future price of it, which is what we have.
Yeah,
which is not a better product.
That's the problem.
It's
and that's why
product.
we need a spot, because we need something to battle that. Because that's what's happening on the 24-hour volume. These whales are putting order books, and they might manipulate that day, and they rug pull you for the day,
which is now what's happening.
And you might get liquidated. Whether you're short or long, they're playing it. they're playing it really
And
good.
if you check in your wallet every day and you see your numbers going up and down, you just
Oh,
getting heart attacks. I had to like cut my shit and be like, I'm not looking at it for a week.
I think I saw that move in Honey when you did the.
I feel like I kind of understood that, but I think
Yeah.
that's very important to understand better.
Yeah.
The idea of a 24-hour value that can be manipulated by
Yes.
whales.
Yes.
And so facto, they basically could pump value into a coin, let other people think it's going up,
Yes.
and then suck it out before
Exactly.
people realize what's going on.
Because
So
not too many people are experienced traders.
So-
They don't know the resistance
Right,
levels.
but it sounds like
Yeah.
the stock market. That's exactly what I mean.
Yeah.
But there's a whole lot of regulation with the stock market. So
Yeah.
like,
Right.
I remember hearing like they're starting to regulate this stuff now. So
This
like,
month, yes.
you know, can you speak to what those regulations are going to be?
Mainly, I heard towards stablecoins. Mainly for stablecoins and different things of that sector, and understand how banks and other private sectors can incorporate stablecoins into their system, which is the USDC, Tether, and other stablecoins that can
and
help.
what's a stable coin? Just so the Evs survive.
Nah, you need to know, motherfucker.
He's like, point at yourself.
I was smart enough to ask the question, right?
I asked this question, motherfucker.
I'm gonna move this over to Brad. I love this. Like,
So what's your question?
what's a
What's a
stablecoin?
Okay, so a stablecoin is it's a crypto that is pegged to a currency. So it's like holds a 1-to-1 peg to a US dollar or to another actual currency, which is fiat currency. And basically Congress and politicians, their initial thoughts were that stablecoins were a threat to US dollar dominance.
Yeah.
And now that they realize that it's actually a way to augment and empower
Yep.
US dominance, they can take a completely different approach and try and encourage US dollar stablecoins, which are pegged 1-to-1 to the US dollar.
And it's my understanding is the reason why you would use a stable coin is because let's say you have a lot of Bitcoin, and you're not really sure what your next move is. You'll
Okay.
put it into a stable coin to just kind of not be affected by the markets one way or the other.
He got it.
Yeah, that's how it
Right?
is.
Yeah. So
Hey, you on to something right
that
there.
is definitely part of what you could do. I think the end game for stables would be to buy things with stables. I basically only use stable coins. My day-to-day purchases are with stable coins.
Yep.
So I have a Coinbase rewards card, and I basically
Yeah.
it's amazing. So I pay
Amazing,
my
man.
rent with it. I do everything goes on that card, and I get crypto cash back.
And I believe if you use USDC with no APR, it's
Yep.
tax-free.
Yep, which is what I do.
And you still get rewards back in crypto. And if you don't spend those rewards,
All right, so I understand
oh, that got you, huh?
How do I get that shit? I want to get that shit.
Yeah.
You sign up on Coinbase.
If I can spend regular money and get crypto in return,
Yeah,
you know,
Exactly.
Yeah,
There's so many
absolutely.
avenues.
Yeah, 1%
There's so many
in crypto.
Oh,
avenues.
now we
Okay.
So I got the white
Okay.
papers, I got the card. All right, I'm getting this.
Yeah.
baby.
Yeah, now
You
you
gotta make sure
see.
you load it up, man. It's like a
Yeah.
debit card.
And
It's like
also,
a prepaid debit card. Yeah.
also Coinbase is, I believe, is backed by the FDIC, up to 250,000. I
They
believe.
should.
Yeah, I believe so.
So that's good.
So you can
That's
put up
good.
to.
So, like, they're gonna have to do things
you know.
because they are, it's a tech company
Yeah.
now. It's an exchange, but now they're starting to get into banking services.
Yeah,
so you're
trying
gonna
to
have
bank.
to start to make some, merger and acquisitions
Mm-hmm.
so with some, maybe a bank. Try to, if you're gonna be providing these services, I think regulators will want to know what is your business, like what do you do.
I won't be surprised if SEC come knocking on Coinbase door.
I mean, they already have, but they're annoying.
Yeah,
They're
yeah.
annoying.
Like he lived with them. He'd be like, yo, he comes to my crib all the fucking time.
They're
He
not
motherfuckers
clear.
mad annoying.
I mean, I think the biggest adoption nobody's going to talk, like nobody's talking about. is-
Doja Cat for McDonald's. Come on.
Nah. You finish what you were saying, bro. Fuck those.
I was going to address that, but XRP and Stellar. I think those are the two coins that people, especially Americans, need to start looking at, especially Stellar and XRP. Stellar's doing adoptions, I believe, with MoneyGram and stuff like that. XRP is in
A legal issue
legal
right
issue,
now.
but that is to prove, my hypothetical opinion is to prove the Howey test, a new modern one.
What's a Howey test?
Brad.
No,
Yeah, Brad.
Missed me there.
Missed me
there.
The Howey test is to prove if something's a security or not.
Oh yes. Okay.
Oh, okay.
Damn, Brad.
Sorry.
Get out the crypto world. Yeah, you know, there's another world we used to live in.
Yeah. I'm plugged in the metaverse.
Oh, yeah.
Yeah.
The Howey test affects how they get regulated or not.
It's how we
Yeah.
are affected by it.
Yeah.
Yeah.
But I think the most clarity is going to be coming from XRP and Stellar side, and I think once that case is done, boom, and we're going to understand what banks are really going to do with XRP. Like if you're over there in China, you don't want the US dollar anymore. That bank might say, we don't want the US dollar. Just send us XRP. We're converting our digital yuan. You see what I'm saying? Yeah. So now we're dealing with something that's very interesting, you know, because we're not sending the US dollar no more. We're going to send XRP or whatever, you know, they want.
We know what they're going to do with it.
Yeah, they don't want our money no more. You know what I'm saying? They don't want that. They want something of value.
All right,
There's
well,
too much blood on our money.
Yeah.
Dollar ain't shit.
It really isn't. Yeah, it really isn't.
my brain needs a second to digest all this information. Now I got to figure out what I'm doing with all this dough.
Yeah. But listen. On a serious note, listen. On a serious note, I want to plug in a book that you guys should read. When Money Dies, 1923, Germany, Weimer. Yes.
There you go.
So if you guys are confused about what's happening now, just read that book.
Okay.
Little kids was playing with money in the street.
I've seen those photos. They were stacking, making little castles.
So what are rappers doing today?
The money spread.
Exactly.
Doing ABC with
Exactly.
dollars.
Look like a damn Monopoly board, right?
Right.
That's worthless. That's the same thing as 1923. So you tell those rappers,
Okay.
stop doing that because you're doing worthless stuff and just making other people follow that trend to another worthless section.
Invest that money into an FT,
Exactly.
motherfuckers.
Yeah, these
That's part two.
Hold people accountable.
We got to talk about Web3 and we got to talk about NFTs, man.
Yes,
All right.
sir.
We're going to tap into that the next time around.
BNP connection, man.
To prevent our audience's brain from exploding, we're going
It
to
is dense.
we're going to cut off to our what is it? Artist of the week this week?
Yeah, is it? That's what it says?
Oh, okay, never mind. Sorry, I have the artist of the week. Someone else has the sponsor of the week, I hope.
Do we?
The artist of the week is Irvin Rodriguez. He is a painter extraordinaire. He currently has an exhibit in what's the capital of Pennsylvania?
Philadelphia. Pittsburgh.
I'm gonna fuck around here. I'm sorry. No, Harrisburg.
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 You got us there.
You know about crypto,
Yeah, that's it.
Geography.
Social studies.
Geography ain't gonna be a thing of the past. So
Yes, he has great work, and he has he's done Star Wars covers. He's done
Comic book TC.
he's actually done a DC cover.
Nice.
He's really doing his shit. He's doing his thing, and we want to shout out to Irvin Rodriguez. You can catch article at our website. And sponsor?
Our sponsor is Dr. Justin Hopkins.
Yes.
He has his own practice in DC. He's a clinical psychologist. He does couples therapy, anti-racism consulting, and he does a lot of mental health, especially to the Black community. So,
Nice.
Thank you for sponsoring, baby.
We really appreciate Mr. Hopkins. We're doing it for you.
Yes.
Nice,
Read all about
nice.
him in our newsletter that'll be dropping along with this
Yes.
this podcast on attorneysforswag.com.
Chargeswag.com, baby. Do you guys have any social medias or anything?
You want to people to come follow you? Anything you want to promote?
Shit might get flooded.
Might get flooded. They're gonna be like, yo, they're gonna ask you mad questions.
Nah, they
It's
can.
all good.
They
That's all
can,
good.
yeah, they can flood Brad. I was about to say
Yeah.
that. Listen. I'm trying to live
Peaceful.
on the ranch. Yeah, me and Brad's gonna be neighbors on the ranch. We're gonna have our horses and stuff like that. You know, that's what the crypto people want.
You,
Yeah.
Brad? Any social media? Anything you wanna?
Yeah, it was Bradley WV Dunn on Instagram.
Nice.
That's really.
Check him out on Instagram. Well, guys, that was confusing.
Ah man.
But we did our best.
This show's all about knowing what you don't know.
The
And
views
this is one of those not knowing episodes.
Nah, the views should be coming up on this because I'm gonna watch this bitch about 4 times.
Do you want any whatchamacallits? Do you want any show notes, stuff people to go to and read up on more crypto stuff?
Oh yeah, definitely.
Oh, I thought you were gonna give me crypto, but nah, that's fine too.
Oh, you gonna airdrop them?
You want some
gonna give them an
This is my
airdrop?
lucky charms, bro.
Listen. Me and Brad's gonna airdrop you Lucky Charm coins.
There you go.
I don't know what it is, but I'm saying it tomorrow.
Thanks, everyone.
No. What they're saying, right? To be clear for our audience, because I actually read that article. I just look at that. But listen, what they said was
Dropping gems like we preaching. Don't overstep the line of our freedom of speaking. We cast to the world, put the words in the street and connecting all the minds of the people we reaching.
Yo, tempted to get fenced in and contempting. Teach you motherfuckers a lesson and pressing the issue at hand. Nah, I don't care about objections, suspensions, and cell inspections. Just suppression of black lives is my passion. And love for my fam is everlasting. So stop gassing these asses with glasses. Cause in the end, I leave them where the trash is.
out. Jury's out. Jury's out. It's not that what we about, and we kick it to the masses. Trying to spit the law as we laugh off our asses. Breaking down the latest shit, carrying crazy lady shit. Glad I ain't got no baby shit. COVID got me crazy, bitch. Damn. And you gon' have to edit this. The jury's out, so you can't even credit us. No statements null and void, invalid evidence. No, we can't take this to court, cause you know. Jury's out.